everyone, welcome to Cheongfuli Weekly Report. Here we bring you the latest China's steel market prices and analysis every week. Spot steel prices stabilized and rebounded this week in China. The spot price of hot-rolled coils rose by 10 yuan per ton week on week, while that of rebar climbed by 50 yuan per ton. On the macroeconomic front, the probability of the Federal Reserve cutting interest rates by 25 basis points in December has increased to 80%. Coupled with the halt of quantitative tightening starting from December 1st, overall liquidity conditions have improved, providing liquidity support for bulk commodities. Domestically, real estate-related data remain weak, leading to strong calls for reserve requirement ratio, RRR, cuts, and interest rate reductions. The policy focus is on implementing offsetting measures, which at the very least do not exert bearish pressure on the market. On the industrial side, the weekly output of the 5 major steel products continued to rise, increasing by 58,000 tons week on week, while molten iron output edged down slightly. Among the 5 major steel products, wire rod output saw a significant increase of 32,400 tons per week, whereas rebar output decreased by 18,800 tons per week. In addition, demand for medium and heavy plates remained robust, with their output rising by 12,100 tons. The divergence between molten iron output and finished steel product output is mainly attributed to the falling price of scrap steel. Steel mills and electric arc furnace mills are more inclined to raise output by increasing the use of scrap steel. On the demand side, demand this week decreased by 61,600 tons compared with last week, with both rebar and hot-rolled coil demand showing a downward trend. Although demand has peaked, the slow drop in temperatures across the country has kept the demand for construction steel relatively resilient. If demand remains stable in December, it may boost market sentiment towards winter stockpiling. In terms of inventory, the destocking pace of the 5 major steel products slowed down compared with last week, with an overall weekly destocking volume of 322,900 tons. Both social inventory and mill inventory decreased to a certain extent. By product type, rebar destocking reached 218,600 tons, maintaining strong resilience. For hot-rolled coils, mill inventory remained unchanged, while social inventory fell by 12,100 tons, and there is still pressure for mill inventory to accumulate again. In summary, the increase in output this week will limit the upside potential of steel prices in the future. However, inventory pressure has eased, and sustained demand resilience has boosted market optimism about the outlook. Currently, the market is placing greater emphasis on inventory factors than output. Only when inventory continues to decline to a reasonable level can the upside space for steel prices be fully unlocked. Otherwise, given the current supply-demand dynamics, the pressure on the raw material sector will intensify further, and there remains the possibility of negative feedback. Therefore, supported by resilient apparent demand this week, steel prices have found some support as a whole. Nevertheless, it will be difficult for steel mills to expand their profit margins, and cost pressures from the raw material side persist. The sustainability of demand resilience is still uncertain. It is advisable for market participants to focus on purchasing based on rigid demand, especially for products where steel mills are facing profit inversion, such as certain special grade steels and billets. Institutions currently maintain that inventory levels remain year-on-year elevated, with demand expectations remaining cautious going forward. However, supported by sustained high molten iron output, cost-side support for steel remains intact, while the likelihood of policy-driven positive measures increases. Consequently, steel prices are gradually gaining upward momentum for a rebound, leading to a recent trend of range-bound strength in prices. In summary, steel prices have stabilized recently. From a product perspective, partial purchases of low-priced special-grade steels and billets may be considered. Okay, feel free to leave your thoughts, questions, or any related inquiries in the comment box below. And if you found this video valuable, don't forget to follow us for more updates. See you next week.